Welcome back. Today, we're diving into the world of financial markets. Ever wonder how companies raise money, why stock prices go up and down, or how global trade in currencies happens? That's what financial markets are all about. Let's break it down. So, what is a financial market? At its core, it's a place where people trade financial assets. These assets can be stocks, bonds, commodities like gold or oil, or even currencies. The goal? To provide a way for companies, governments, and individuals to exchange value, often to raise money or manage risks. Financial markets are split into different types. Let's start with a few you might know. 1. Stock markets, where people buy and sell ownership in companies. 2. Bond markets, where entities like governments or corporations raise money by issuing bonds. 3. Commodity markets, where raw materials like gold, oil, and crops are traded. 4. Foreign exchange markets, for trading currencies between countries. 5. Derivatives markets, where contracts based on the value of other assets are bought and sold, often for risk management. Here's how stock and bond markets work. In the stock market, companies sell shares to the public, giving people a chance to own a part of the company. In return, the company raises money for projects or expansion. With bonds, it's similar, but instead of selling ownership, companies or governments borrow money from investors and promise to pay it back with interest. Then there's the commodity market. This is where people trade things like gold, oil, and agricultural products. Commodities are split into soft commodities, like crops, and hard commodities, like metals. Why does this matter? Because commodity prices impact costs for many businesses, affecting everything from food prices to the cost of electronics. Now, the foreign exchange market, the largest financial market globally. Here, currencies are traded between countries. It's essential for international trade because businesses need to exchange money when buying and selling across borders. Think of it as the backbone of global business. Two important concepts in financial markets are liquidity and risk. Liquidity is how easily an asset can be bought or sold without affecting its price. The more liquid the market, the easier it is to trade. Risk, on the other hand, is what you face when market prices fluctuate. Financial markets offer tools like derivatives to manage these risks. Derivatives might sound complicated, but they're just financial contracts based on the value of something else, like stocks or commodities. They're often used by investors to protect against big changes in prices, also known as hedging. But they're also used by some to speculate, hoping to profit from price movements. To wrap up, financial markets connect people with capital to those who need it, like businesses, governments, and individuals. They drive economic growth by funding new ideas and projects, and they give investors opportunities to grow wealth. Understanding how these markets work can give you a new perspective on the financial world. See you in the next video.